Welcome to lecture 3 of this financial accounting. We are still in chapter 1 of this the course, and the lecture 3 we are going to look at introduction to financial accounting. Under introduction to financial accounting, we are going to look at meaning of accounting, meaning of accounting. 2, the purpose of accounting. Number 3, the types of accounting. 4, shall look at the financial statement. Financial statements. These are the things we are going to look at under introduction to financial accounting, lecture 3. First, let's look at what is accounting. Accounting is a systematic and comprehensive recording of financial transactions pertaining to a business and the process of summarizing, analyzing, and reporting these transactions. This means accounting deals with the recording of all financial transactions of a business, and after recording the financial transactions of a business, we have to now summarize those transactions. We have to analyze the transactions. After analyzing the transactions, what do? We now present these transactions to the users of the financial statement. The users, what do they do with it? They make their financial decisions concerning that business. So, and accounting is very important in the business. We use it to measure the performance of that business. That is the introduction. Now, the accounting itself, I made mention that it's a process of what? See, it's a process of identifying. We have to let's say, meaning of accounting. Made mention that it's a systematic process of identifying, recording, measuring, classifying, verifying, summarizing, interpreting, and communicating financial information. There are some key points that we have to pay attention to when defining accounting. So the first is what? You have to identify. Identify. First, the first thing to do is to identify that transaction. Once you identify the transaction, what do? We now go ahead and record the transaction. Now measure that transaction, and we classify the transaction. We classify that transaction. After classifying the transaction, we verify it again. We verify the transaction, and you need to summarize it. Summarizing, you now summarize that transaction. After summarizing, you do what? You interpret that transaction. After interpreting it, you have to now communicate it. You have to communicate. What are you going to communicate? You have to communicate the whole process, the summarize transactions to the users of that information. And this is what will now help them to make their decision concerning that business. Without this, they cannot make a meaningful decision concerning the business, because the financial statement, that is what will tell them the position of that business, what actually happened in that business. So with that, they can now make their decision. So that is meaning of accounting. Then we are now going to look at the purpose of accounting. Purpose of accounting. The purpose of accounting. Why do we even have accounting? One, it provides a record of financial value of a business. A record of financial value of a business. So this is one of them, the purpose of accounting. Two, it assists with management of financial affairs of the entity. Assists management with financial affairs of an entity. Number three, provide information. It provide information. It provides information. Accounting provide information, and majorly accounting provide the information of financial nature. So these are some of the features of purpose of accounting. And we are now going to look at the types of accounting. Types of accounting. One, we have financial accounting. Financial accounting. We have financial accounting. This involves the process of recording, classifying, preparation, interpretation of financial statements, so that both the internal and external users can make informed decisions. With the help of financial accounting, both internal and external users of the financial statement or information can now make the informed decision about that business. Without this, they will not be able to make any meaningful decision. Then we have cost accounting. Cost accounting. Cost accounting is the procedure of accumulating cost data to provide information for planning, controlling, and decision making by management. This cost accounting is mainly for internal use, and they are called cost accountants. They now prepare their reports concerning the costs and the cost and planning. Also, it also helps management to make decision concerning the cost operation of that entity. It's number 3. Performance management. Performance management. This performance management is a continuous process where managers and employees combine efforts in planning, monitoring, and reviewing the effectiveness of a workforce toward the achievement of the overall objectives of the entity. This what performance management is all about. We have auditing. Auditing. This is an independent examination of financial statement of an entity by professional, and these professional they are called auditors. I have next one is 5. Government accounting. Government accounting. This government accounting is a part of public sector accounting that records revenue and expenditure of government ministries, departments, and agencies. The government uses this information for appropriate decision making. This government's accounting. And the next one we have taxation. Taxation. The accounting profits generated in the financial statement provide the basis for determining the taxable profit of an entity. The taxable profits are different from the accounting profit because certain expenses and income are allowable for accounting purpose but disallowable for tax purpose. So that is the taxation is number 6 we have here. We have number 7. This number 7 is financial management. Financial management. So this financial management is the process by which the resources of an organization are efficiently and effectively procured, utilized, and accounted for by the owners of the business in such a way to maximize the wealth of the owners. We have it is forensic accounting. Forensic accounting. This forensic accounting is the application of accounting skills to investigate and prove frauds, deliberate mispresentations, or embezzlement of an entity's resources with a view to recovering such funds, usually through legal ways. Number 9 is social and environmental accounting. Social and environmental accounting. This social and environmental accounting is the branch of accounting that deals with accounting for and reporting of a social and environmental impact of an entity's activity upon the stakeholders. That is, those stakeholders we have investors, management, employees, customers, suppliers, local communities. That is the host community. We have number 10. We have 10, which is bookkeeping. Bookkeeping is the process of recording financial transactions in the accounting record of an entity. That is whether they are using manual or they are using software. It is accounting record. So it is the bookkeeping. So now we are going to look at the financial statements. Financial statements. Financial statement of an entity. This financial statement, what do we really mean by financial statement? As I explained earlier, that we have to record. After recording, we have to classify, summarize. At the end of the day, what are we going to have? We are going to have a financial statement, and this financial statement, who will now use this financial statement? That is why we now have users of financial information. So they are the one to use this financial statement. And how can we generate this financial statement? This financial statement starts from recording of transactions, and at the end we are going to have a financial statement. That is the end result of recording transactions. And how do we do that? We do it through double entry bookkeeping. And this double entry bookkeeping is used to record transactions in a system designed to allow the management of the business to monitor its progress and produce periodic financial statement and performance reports. And this financial statement or performance report is produced periodically, and is required by law to be prepared once in a year. This is called financial statement, and they can prepare it quarterly, that is after every 3 months, but it's required by law to prepare this once in a year. That is a financial statement. The objective of financial reporting is to provide financial information about the reporting entity that is useful to existing and potential investors, lenders, and other creditors in making decisions. This is what will now allow the users of that financial information to make decisions on concerning that entity. For instance, potential investors, before they invest their money into that business, they have to go through the track record of that entity. That is, how would they do that? They have to do that through the financial statements of the entity. They will now look at the past record of that entity. How good is that business? How are they running the business? And to do that, they are only to look at the financial statement of that entity for a particular period. That is the importance of this financial transaction, financial statement. So thank you so much. This is where we are going to end this video, and in our next class we are going to look at the basis of accounting. Thank you so much.